Hey everyone, it's Zach with Palantir Research. Palantir is getting pummeled today in the stock market after some rating updates by Morgan Stanley. And I'll go over my thoughts there and interesting buying activity from them actually last quarter. But like always, as a long-term shareholder, the story really depends on what noise you want to pay attention to, especially in the short term. So not too long ago, I actually made videos pointing out the fall to $14, which was just this week actually, but then flying all the way up to 16 just yesterday, and now we're back down bordering $14 and $15 again. So first things first, Morgan Stanley downgraded the stock from an equal weight to underweight. Basically a bad risk reward scenario in my opinion, which some would give as a fair argument, especially in the short term. And they go into their reasonings why they think this. So the first challenge is the monetization of AIP. Now, I knew when Karp said they have no monetization strategy and want to grab the market at all costs, there's always going to be the investors who love that take, of course, of taking all the market they can while they can without even making them pay, versus the others who just want to get some money now, even if it does inhibit some growth. So you can argue both ways and can be viable depending on your business, but also detrimental depending on your perspective if you believe competition is ramping up and has an equivalent or superior product or just better distribution. We did see the new product for OpenAI for enterprises, so it's going to be interesting to see how that actually plays out. But that is another story to say if they are even equivalent products, and I personally don't believe so with their level of transformation, and that's the potential they can do on an organization. But we'll keep that for another day. And Morgan Stanley also brings up the government segment will probably not grow to offset the deceleration of revenue that they're seeing while they focus on just gathering these AIP customers. Now, what they also note in their client notes is that they expect over time more investors to become increasingly focused on tangible results on AIP expansion and point to revenue contribution for this specifically, which I think a lot of traditional investors, of course, would do that. But I know a lot of the retail community does look for leading indicators like myself when it comes to customer count, and even before earnings, seeing the growth of links from Ether Square. It's kind of a bet still of getting that information and giving it some trust. And it does give you an edge there if it actually plays out. However, if you don't know about that stuff there, you're just not going to really know. And then you're just going to rely on the revenue numbers reported. And then they summarize simply what these cautionary factors are. But in addition, they want to point out that even with the potential good news coming up of profitability, S&P inclusion, and the NHS deal potentially, they see it more as already priced in and will be the sell the news kind of catalyst when it's known. The video I just made for Bank of America literally had the same catalyst, but from their own perspective that it's going to be good for the stock. Which brings me to this point, of course, that I cannot stress enough for individual investors. These analysts' ratings and price targets should not be your anchor point or solely your own opinion when you're going to put your personal investment thesis together when it comes to a stock. It's always great, though, if they bring up new information and can broaden your perspective, or at least take factors into account that you haven't had to before. But on that point also, I wanted to mention in a previous video is that Morgan Stanley, who did this rating, also increased their Palantir position by 50% last quarter. Now, I'm not saying for 13Fs that they're giving mixed signals here, but still, we have no idea if they're buying, selling, or holding more right now since we are in the middle of Q3. But it's also important to note, especially on these volatile days up and down, it's important to stick to your own investing style and goals and what, of course, you know as an investor and the information and research you've gathered. But what are your thoughts, though, on this recent volatility, flying from 14 to 16 down to 15 all within the same week? And these analyst reports all over the place, like Bank of America's $18 price target when I went over in this last video. But let me know below on your thoughts on this, and thank you all and my channel members for watching, and I'll see you in the next video.